Good afternoon, everyone. Welcome back to the Rekt Mkts Daily, Volume 3. Just going to do the usual and get this posted everywhere. I believe I need to post this on X now. So I've been using this new. Oh, you're fucking kidding me! I've been using this new producer stream thing in X, which I think is quite good. But there's something wrong with my account on X where I can't load it sometimes. Let's just see if this is working. And now I can't see comments and stuff, which is just a bit stupid, isn't it? Let's see if this is working. No, great. Fucking great. Okay, yeah. It looks like I'm live. And I just need to. I can't see questions right now. Oh man. You would think with all the efforts on X they could just get this stuff working. Shouldn't be that hard. Let's see here. I basically just have to log on to a different X account to see the stream because my own X account doesn't load, but the streaming works. So stupid. All right, fuck it. We'll go. I just can't see questions. I just can't see questions or comments. This is just so stupid. I don't understand why X. Why? I'll show you what happens. Not that you guys care, but literally cannot load my X account. X.com, X.com, X.com. I just get this blank screen. If anyone has the same problem and you've found a fix for it, please let me know. But it's just really frustrating. Okay, so what do we chat about today? Google just reported, so we can have a look at that as we get into this and it comes out a bit more. I've actually been off most of the day. It was my mum's birthday, so I'm kind of just catching up with markets. But I figured I would just do what I would do anyway, but I'll just do it live on stream and talk through my thoughts. Meanwhile, I can't see any of your guys' questions or comments. Maybe I can get it on my oh yeah, here we go. I get it up on my phone. Okay, perfect. Not ideal, but we will make it work. So I can see your comments on my phone. So here's what I would typically do if I've sort of been off markets for a day, and which happens very rarely. And it's not even really a day I've been off. Soulberry, by the way, best summer drink I think that we've done. Nice and refreshing. Very little sugar, no artificial ingredients. It's a pretty good one. I've been smashing these all summer. So, the thing that if you guys read the morning commentary, the thing that I find a little bit, there's two things that I find a little bit concerning about, I'm just talking about general markets now, general risk, primarily equities. It's not just crypto, but as you guys know, I sold all my stocks. I don't own any stocks. I'm all in cash for equities, which is at least in the trading book, but that's very rare for me. I'm not a bearish person. Again, any of you who knows me, I'm always super bullish, but it's the first time since I started this trading book that I'm just flat all stocks. I just think, I mean, it's more of a gut feel than any science, but rallies seem to get sold into right now. It's very clear. Whether you're looking at AI stocks, like hyperscalers, memory stocks, even the indices, rallies just seem to get sold into. We had a very big day yesterday. No real follow-on bid from it. I think stuff it hasn't retreated as low as I thought it would today, but it does feel like very much sell on strength. The other thing is, in equities at least, we've been not following, but we've definitely been impacted a lot by what's happening in the KOSPI in Korea. And for anyone who's not familiar, there's tons of leverage in that retail market, and there's like 2 or 3 stocks, I think basically Samsung and SK Hynix, which make up something like 60% of the KOSPI. So it's all been super volatile on 2 memory stocks, which are AI proxy plays basically. So that we've seen in the last month, I think that's down something like 20 or 30%. Let's have a look. Let's bring this chart up. KOSPI index. Let me. What have I done here? Let's bring this a bit more in line. I need to get better at the stream stuff. Okay, that'll do. So yeah, in a month it's down 24%. Year to date it's up 60%, which is, it's sort of, that's, I mean, over a year it's up 111%. That's a gigantic move for a country's stock market, but it really has been driven by 2 stocks, which is primarily SK Hynix and Samsung. And this is up 570% in a year. It's like mental, right? I think I've got Samsung on here, but something similar. Maybe it's this one. I don't know. Yeah, this one. So that's up almost 300% in a year. So those 2 things are really driving it. But I get back to my original point. We had many leveraged liquidations from the retail market on the Korean exchange. Some crazy stat, like something like 1 in 30 Koreans got liquidated. So it shows you how much exposure there is there. But despite that, and generally speaking in crypto, when you have liquidated clear outs, like complete flush in leverage, you get like a big V-shaped bounce and a big rally, sort of like what we saw in the US market yesterday. But I would have expected this. This KOSPI should trade at a beta of like 2 or 3 times the US market, right? And this has had days where the entire exchange is up 8 to 10%. It's had days where the entire exchange is down 8 to 10%. So I would have expected something like this to be up a lot overnight, and it wasn't. It was up. It started higher, and then you can see into the close basically just sold off. So this shows me that whether it's, maybe most of the liquidations are done, but people are generally like selling strength, and because 60% of the index is in 2 to 3, I think it's 2 stocks. I think it's just SK Hynix and Samsung. I'll check that. Let me just ask my AI bot right now. How much of the KOSPI is Samsung and SK Hynix by market cap? Because of that, that's another reason why I feel more cautious. And I actually thought, seeing this price action, I thought we would be lower today in AI stocks. We are a little bit lower, but not as low as I thought we would be given recent volatility. So that's another reason why I'm a little bit cautious. Another reason is oil. This is up another 2 to 3% today. It's up a decent amount in the last 5 days. It's up quite a lot in the last month or so since Iran and America supposedly de-escalated. You know, oil has climbed from, this is WTI, I think. Yeah, WTI. This has climbed from about the lows of about $68 per barrel all the way now to 86. This is concerning because we need low inflation numbers to get rate cuts or not get rate hikes, and obviously it means that geopolitical tension is sort of not completely distilled. So that's concerning. And then, of course, the move in rates is concerning, and this is correlated to the price of oil, absolutely. But in the last 5 days, you see 10 years sneakily climbed another 10 basis points higher. 30-year, I read some stat with 30 years at the there's some stat I need to go find it, but it's been at a very elevated level for a long time. Don't you hate it? I asked my AI about a really simple question, and it's like, I'm checking the endpoint requires a login. I'm cross-checking the Korean market data published by it. Like, it's just like, I just ask you a really simple fucking question. Just answer the question. I asked you a really simple question. Just answer it. Why are you calling Python scripts? So that's another cause for concern. And then September typically is generally a bearish month. We have the FOMC next week on the 29th. So, you know, yesterday I was feeling a little bit like, oh man, I fucked up by selling all my stocks. And I think had we moved higher again today, I would really be feeling that. But we haven't, and it kind of is reinforcing to me the reasons why I sold. Now, don't get me wrong, and we're talking about a sort of like more of a short-term trading book. I'm not talking about long-term positions. If you have stuff that you want to hold for a year plus or even 6 months plus, I would not be selling any of that stuff here. In that time frame, I'm really bullish, especially the AI stocks, and I'm really bullish on the memory stocks. I don't think we're going to see the memory cycle top here. I think it's going to keep going and it's going to keep persisting. And I think financial analysts who call for that, people who don't use AI, hey, remember this as a fact, right? This is absolutely a fact. The biggest banks in the world will produce equity research, etc. These guys, their main job is to do equity research, and they will probably spend long hours doing it, like 12 hours a day, I'm guessing, right? So these guys aren't doing extracurricular stuff outside of work, generally speaking. Maybe a handful of them are, but generally speaking, they're not. Why is that important? Well, most banks, in fact, all of my mates who still work at banks, still work at hedge funds, etc. And I was chatting about this with a mate of mine. Shout out Cam if you're listening, but just the other day, and we're like, look, the smartest people we know from our old TradFi days in banks and hedge funds, investment banks and hedge funds, none of these guys are using Claude. None of these guys are using like a frontier model of OpenAI or OpenClaw or Hermes or anything like this. Like, none of these guys are using this technology. And the reason why they're not, away from just the usual chatbot stuff that everyone does, the reason why they're not is because it's really, for Claude to get implemented at, let's say Goldman Sachs or JP Morgan, they have to go through so many hurdles to actually get it there in its full form, right? Because there's security concerns, there's accessibility concerns, there's all these sorts of concerns that a really, really big company, the legal concerns a really big company has to go through before they make the entire thing like fully available for everyone. So I think parts of that world is starting to get access to it, but pretty much everyone that I know, I think there's one person that I know from that world who is able to use Claude at work, right? So this is one of those things which, unless you're using it every day and on a daily basis, like most of us are. And if you're full-time crypto, or if you're full-time CT, as I like to call it, you're generally at the forefront of technology, I think. And you see this stuff. You're using it every day, so you realize how powerful it is, and then you realize that, there's that crazy stat, only 0.3% of the world is using a paid AI feature, and you realize it's literally going to go up by like 100x because this stuff is so powerful. But we're so far away from that, and I think that's the important thing to remember. So when finance guys, especially equity research guys, are going out there and they're like, modeling it off previous memory cycles and et cetera, they haven't actually used AI to its full extent, and they don't really understand how big the power is. And there's only so much you can read, but when you're actually using it day in, day out, that's when you realize the full potential of it. And I think a lot of these people who are commenting on it from the TradFi world don't understand it. Now, unironically, the people who've made a lot of money on memory are actual engineers and people from the AI world who are like, fuck, I see what's happening here. I know how much demand is going to increase, and I know this is a bottleneck. This is just going to go crazy. And like, those are the guys who've actually made the money on it and who've been talking about it for a while. So you have to be, when you're a retail investor and when you're just people like us, and even I have friends in different industries and from where I used to work, but even me just sitting here fucking looking at my Bloomberg screen or looking at TradingView or whatever, you don't have loads of information, and you're kind of going off what people say a lot, and you're going off Substacks, you're going off research reports, etc. But you always have to ask yourself, like, who is writing this report? Do they have an axe to push in the report, and how much do they really know about it? Honestly, I've worked with people who've been research analysts for many years who I would never ever put a trade based off their call. You know what I mean? Like, it's almost like I would do the opposite. There's so many Jim Cramers out there in published research. And the other thing about published research is none of these guys are taking risk, right? Actually, you cannot be a risk taker. You cannot be the person taking risk if you're producing published research, if you're producing published equity research or any published research, because of Chinese walls and whatnot. And there's legal stuff which says you cannot be like, I can't work at Goldman Sachs, put out a research report saying I'm really bullish Micron, and then go and be the same person who's then going and buying Micron before I push that report out. So these guys, these analysts, are not risk takers. So they're looking at their models, they're looking at history, but they're not actually the ones taking these bets. They're not actually the ones who have to outperform a benchmark or provide certain returns or trying to make money necessarily, right? They're just trying to produce research that they hope people will find useful. So you have to bear all these things in mind, and I think some of the commentary is off on it. Now, it's quite funny because I think actually all the TradFi guys are quite bullish on memory stocks, more so than others. They all have very high price targets, and they're all, pretty much every stock is a buy rating. And I do think that tells you a lot. So I guess going back to the original point, I sort of diverged there. I think I'm really bullish on all of this stuff, but it's over a longer time frame. It's over a 6-month, 12-month time frame plus. I think these supply shortages can continue to go on into 2028. There's been commentary from CEOs of these companies to that tune. Obviously, they have an incentive to say that, and a lot of these guys, remember, are selling shares. SK Hynix did an ADR, so they definitely have an incentive to say all that stuff, but it's also reputational for them, right? You can't just go out there and say something insane and then, fall down tits up if it all goes wrong. So the reason why I say all that is I know lots of people have long-term stocks, and I don't want anyone to think, oh, I better sell here because Ovi's bearish in the short term. This is just really a short-term view into August and September. That I just feel a bit concerned. You could very easily see a repricing in all of this stuff, I think, and for no good reason other than technical sell-off. And we've had it already. We've had a 20% move lower, but that's not, in the context of how much this stuff has moved, that's not that much lower. In the context of even how much the NASDAQ has moved, it's not that much lower. And from a macro standpoint, pretty much every thing that I'm looking at is kind of stacked against it. Rates, oil, we're at the other side of the geopolitical spectrum now, where before it was good because you knew you had the catalyst of a positive headline, whereas now we've sort of had the big positive headline and we're starting to negative headlines are starting to seep in, and if anything, it feels like it could go more the other way. And then just the fact that every rally seems to be getting sold right now, and I think FOMC is a big risk. Like, probably keep rates the same, don't they? They probably keep rates the same, but there is a school of thought out there and people that I speak to who think it could, think we're pretty much guaranteed to see a hike or 2 hikes this year, and there's no FOMC in August. There's one in July, then there's September, October, November, December. So there's not, we're in the second half of the year now, and if you get 2 hikes, I think that's kind of perceived by the market to be a bit negative as a knee-jerk reaction, and then things sort themselves out. So I want to, my goal is really to keep powder dry, I think, to buy dips. Like, I'm not bearish enough to short the market. I think we're in a generational bull run that will continue for more years, and you just can't go short in these moments, right? Like, sure, you can go flat like I am now in stocks and miss out on some gains. It's not the end of the world, but to go short, I think is, for me, feels punchy. You can maybe construct good downside risk positions with put spreads and stuff, and I kind of considered doing that, but it's one of those things. Like, I looked at doing it on the S&P 500 yesterday, and the vol on that is super low, but it kind of also just feels like a mug's trade, doesn't it? I feel like everyone is probably looking at that and thinking, like, look at how volatile these stocks are. Let's buy some vol on the S&P 500, and for into September, lo and behold, it doesn't really move, or it just moves a little bit. Like, that could very much happen. You could also, I think, see something where that flat lines or only moves a little bit lower while other stocks get absolutely decimated. So I've not done anything there. It doesn't feel like to me it's anything worth doing in terms of buying protection. I think something I'm going to look at, which I meant to look at today, I didn't get around to doing it, is selling puts on some of these high vol, probably memory names, maybe some stuff, maybe even the neo cloud stuff, like some of these momentum names. I like the idea of selling puts. Vol is crazy high in this stuff, right? And I think vol can come down a lot, but I think it's a good way to, the way that I view it. This is, I don't really have a good sense of the viewer base here, so I don't know who's familiar with what I'm talking about and who's not, but I'll explain it anyway. Let me just get this streaming questions back up. A put is an option to sell a stock. So if I sell a put, I'm selling someone else an option to sell the stock to me, and you take in premium for that because you're selling an option. So the way that I view it is, let's say I'm looking at something like, let's bring up a chart here. Why not? Something like Micron. I really like Micron because you don't have up 16% in 5 days. Mental. I just should have held on for. I just needed to hold on for 1 day longer on that position. It's just fucking annoying, but that is trading. I like this. I kind of have a preference of this over some of the Korean stuff, and possibly even over SanDisk, because they're clearly in bed with Trump, right? You've seen Trump comment about Micron a few times in public. You've also saw that the Micron, I think, put in $250 million into the Trump accounts or something like that. So I think anything with a Trump tailwind, it just feels like you should put a high weighting on that, or at least it should be a differentiator if you're picking between 2 stocks and one's in Trump's portfolio and one isn't. You know what I mean? Like, for obvious reasons. So That's why I like this. But something like this, where it just feels dicey to buy it here. And I know you could have said the same thing here, but in this time frame, they've had insane earnings, and you've had some legitimate concerns on this memory trade. So this feels, especially going into September, this feels scary to me. But like, if it dropped back to 800 or even this level here, I think the 100-day moving average is, as you guys will know, I'm not a chart guy. I think I can even bring that up here. I'm not really a chart guy, but I figured I might as well use some of the levels that people are talking about to help myself on that. But if let's change this to 1 day. I think that 600 to 650 area is like super interesting. Like, of course I would buy. Of course I would buy there. At least that's what you tell yourself. If it drops there from here, you're probably shitting yourself. That's generally the way it is. But around there, and I would probably look to. This is something where, like, okay, I'm short-term worried, but long-term bearish, and I want to DCA, and I'd probably start DCAing around like 800 and then lower all the way down to there. So a good way that I think to do it is just to sell puts. I can be like, cool, I'll sell I'll sell whatever it is, like $100K, $100,000 worth of puts, and if it hits that level at 800, I'll take in some premium up front. I'll take in some money up front, and then if it hits that level and I get assigned and the option gets exercised, then I end up buying at a level that I was happy to buy at. Now, obviously, someone will only sell it to me if it's lower than that price, and that's sort of the option you're giving them. But if you think about, I like to think about things as mechanical levels. Like, I will buy no matter what, no matter how bad the news is, I'll buy at X level, or no matter how good the news is, I'm going to sell at this level. And you're never going to get the exact top or the exact bottom, but you just set a ladder of levels down there, ladder up there. And because on a name like this, vol is so expensive, let me find out actually how much. The previous answer, Samsung and SK Hynix account for 50% of the Korean stock exchange, of the KOSPI. Now I'm going to ask it, if I sold $100,000 worth of Micron puts, how much premium would I take in? Use a 800 strike and a SEP 30 maturity. Let's see what that comes back with. By the way, like, this is the incredible thing I think about AI. Like, before, I would look up the live prices, you get the actual option prices, you know, I'm calculating it. I think it's still important to be able to do that, to understand how it all works. And I don't need to go through it now. Like, there's billions of YouTube videos you can watch on options which explain them. But now that's not even really the way I think anymore. It's just like, you just whack it to your chatbot, right? And just ask it, and then it tells you the exact stuff. And I've built quite a lot of dashboards and stuff for myself around that, which I find useful. I'll maybe make it available to pro members and stuff. But you see here it says there's no SEP 30 maturity, but there's a SEP 18 maturity. So I'd take in, if I skip to the end, the premium you take in near the midpoint is about $7,000. So I can put up $100,000 worth of, view it as like a limit buy order, I guess you could say. It's not really the right way to look at it, but you can kind of say that. At 800, that capital is tied up, and then you get paid $7,000 up front. And then if it never hits that 8,000, that 800 level, and it stays above it, then it, by the time it gets to September, I'll make 7 grand. And if it does go below it, then I'll still make that 7 grand, but I'll end up buying the stock at some level below 800. And obviously I think the break even point, it looks like here it's telling me is 732. So, because you take that premium up front, your effective break even is lower. So, it's pretty good. Like I sell an option at 800 strike, and I've taken 7 grand, and then my break even point is 732. So it'd have to drop below 732 for me to actually lose money on that trade. And generally speaking, you don't do these if you're bullish, right? If you're bullish on something, you want to have all the upside. You want to be riding this higher. You don't want to your ups. Selling a put is not a convex trade. Your upside is capped. All you can really make, the maximum you can make, is the premium you take in. The maximum I can make is 7 grand. So if the chart then does this through September, sure, I'm not going to get exercised. I'll make that 7 grand, but obviously I've missed out from just buying 100k worth of spot and then doing that, right? But now if the chart does this and doesn't drop below this 800 level, but it still is lower than where I where I could have bought, then you haven't lost money from it going low, or you haven't lost money from it just flatlining. But then you've made that premium up front. And so the reason why I think puts are interesting here for me to sell is I can sell them at targets where I want to buy. And if it goes there, then I end up buying it. And if it doesn't go there, I end up just taking it and collecting premium over this time period. And that's a better use of that cash that I have, rather than just sitting in $1 million worth of cash that I'm not using. It's a better use of it. And that's not really a bad yield. That 7K, by the way, is actually on $80,000 worth of notional. So it's about an 8.3% return, or 8.3% yield you can think of on that amount to September 18th. So yeah, 8% over 2 months for something you're happy to buy at that level, but you're generally skeptical about on risk is pretty good. And I think that's what I'm going to look at tomorrow. Ideally, you want to do it in a down day, because then you'll be able to get a better price for when you sell those puts. But I've been doing a lot with options, I think, this year. And if you look back, if you're a pro subscriber on Rekt Mkts, you can see the trades that I've done. But I did pretty well on Micron calls. I bought out the money calls pre-earnings. That went up a lot. I bought I think I made like 5x, 6x on MicroStrategy calls as well. I bought out the money 100 strike calls when the stock was at like 80. And this shit will move a lot. Like if you get the right level, if you get the right part of the vol curve, and something out the money goes in the money and then starts rallying, the convexity you have, the stuff is really, really crazy. Now, similarly, it can get absolutely torched to the downside. And if you're buying options as well, you basically lose money on it every day if it's not moving in your favor. But I think it's been quite an interesting way to make money, because there's just so much vol in all these stocks. And sometimes I think, how can I have an edge in trading stocks? Like fucking $1 trillion market cap companies, and you have the smartest people in the world trading this stuff. But when it comes down to, yeah, sure, like the smartest people in the world will pick out these narratives and know what to do, or people who see the flow will know what to do. But it all just comes down to, I think, human and market psychology. And this stuff is actually better to trade because it's so liquid, and options are so liquid on it. I think often just as simple as like forcing yourself to, it's dumb to say, but forcing yourself to buy lows and sell highs, if you can just do that and then do it within the option space with a lot of volatility and convexity, there's a lot of money to be made. But you just have to be disciplined as fuck, and you have to be really sharp on levels. And there's been time, even on MicroStrategy, there's been times when like it absolutely ripped, but I had like 2 minutes to sell it and type in all the levels and etc. And when it first moves, you're trying to like calculate in your head where shit should be But it's definitely like, if for people who feel comfortable with options or starting to, I just think they're amazing tools and they create a lot of trading opportunities. So I think that's what I'm going to look to do in stocks, depending on prices, and probably try and just pick a down day for it. There is a big volatility event, which is SK Hynix earnings on the 29th of July, so that's a week from today. There's been some rumors from, I think, Korean, not rumors, but like, I think some of the Korean research houses, one of the larger ones, has actually downgraded their guidance on it. That to me is a bit concerning. Maybe it's priced in. What's this stock down? This stock is down. Let's see. It's down a decent bit this month, like 25%. So maybe a lot of it is priced in, but again, like I said yesterday, I just think we've seen good news for memory names. It's the strength that gets sold in it. We've seen some rumors of bad news, and it's been absolutely torched. If one of these guys has a bad quarter, and a bad quarter can mean anything. It can mean a miss on revenues. It can mean a miss on margin. It can mean not increasing guidance to. That's probably the bigger thing. Not increasing guidance to what the market wants. It can be the wrong mix of memory. HBM versus other stuff. Lots of things. There are lots of things. It can be, even SK Hynix, they have massive capex plans into 2028. There's all these. I just feel like there's all these risks where if they miss on something, or if something is not what people like, I think you could have a big drawdown in that entire space, and that's probably the dip you're meant to buy. And I think if they have really, really good earnings, I just don't think it's going to rally that much. I don't know. In my personal opinion, I don't really know what they can say for it to rally, other than having some actual like hard evidence or proof that memory breakthrough is not happening, like the cost of models will need less memory, or something like really concrete. But they're never going to be able to produce something concrete on that, right? And no one's ever going to believe what they say about that, because they're obviously going to be pushing their own agenda. You also have CXMT, which is the Chinese guys. They're IPOing next week, and they have something like close to, I think, maybe 7 or 8% market share, and that's expected to increase as well. And obviously, much cheaper than the South Korean guys and Micron. So just as bullish as I am, I just think there's a bit of this overhang, and I think it needs to reprice. And that's when I feel more comfortable buying in. And I could be wrong, and maybe it's a bull market. Maybe all that stuff is now priced in already because it's dropped 20%, and maybe the market, it blows over it and we just keep going. I could be completely wrong, but it's more just a position into SK Hynix earnings if they're not good. Because if they're not good, like, stuff will sell off for sure. And there's probably still a lot. Don't forget, there's probably still a lot of leverage in Korean stocks, and they'll have the whole stock halting stuff, and more people will get wiped out. And it's not even just people, right? It's when big funds get wiped out, like big hedge funds, and they then have to sell everything that they have. Like, it can really cause a cascading effect. And I just feel like the downside into that is much bigger than the upside. And to be clear, I'm not making a prediction on what happens, right? I'm not making a prediction on. I'm not saying earnings is going to be bad. I'm not saying earnings is going to be good. I don't know. And that's what you have to remember. Like, none of us have any fucking clue. Even if you're the best research analyst in the world, you can model something, but unless you have inside information, which I bet you some of them do, but unless you have inside information, you don't really know what the numbers are going to be. You're just taking a guess. It may be an educated guess, but you're still taking a guess. And the level of education from my guess, I'm self-aware enough to realize is extremely low, right? I can just read what I read on my screen, and that's kind of it, really. Chat to people, but that's kind of it. So I don't have an edge in that. I don't have an edge in predicting what the number's going to be. But what I do think I have an edge in is understanding where things will move dependent on outcomes, and identifying when one outcome is a much higher probability than the other one, or identifying the risk reward and viewing it in that lens, because I don't think everyone looks at things that way. And to me, the downside feels a lot bigger than the upside. So let's see what happens. And I think I'm just going to yeah, it's tricky when you sell puts now and then the numbers are really shit, and then you're like, fuck, and I need to buy those puts back and then buy the stock. Like, that kind of ends up being like a bit of a messy trade, but because you lose money on selling puts. So I'll have a look, but that's yeah, it's pretty much my thoughts on stocks right now. I want to look at the neocloud stuff as well. There's a couple of stocks that I think are really interesting there. I'll speak about it a little bit in the Rekt Markets Pro Discord. There's a couple of things that I think that are interesting there, but again, I think you can just be patient on stocks. I don't think I need to chase or FOMO. Crypto, I don't really know what's going on with this Clarity X stuff. Like, I saw the probability on Poly Markets drop, and then I saw Brian Armstrong tweet about it. It feels like maybe the reason why odds drops is because the current makeup of it has a low probability of passing. Let's have a look. Poly Market Clarity. Yeah, so 39% chance right now. And that's dropped from... it was... yeah, north of 50% yesterday. That's quite a big drop. Within the context of the month, it was much higher at the beginning of July as well. So I don't recall there being that much noise about that in July. And what's this, July 5th? Let's have a look at what Bitcoin did on July 5th. Yeah, like Bitcoin barely even moved on July 5th. So I don't know. I don't understand why there's so much noise about it now. It might be just Polymarket never really priced it in. I don't know, but why there's so much noise about it now and why Bitcoin is rallying now compared to then, based on this probability, I guess there's some actual reasons why, rather than maybe the market being moved here. But we're obviously back down. So despite that, yeah, Bitcoin's still hovering around 65, 66K. To me, it feels like the Bitcoin rally is less about clarity and probably more about something else. Maybe more about... oh, my camera's off. What happened there? Sorry about that. That was weird. I think it's less about clarity, more about... there's another reason why it's strong. Probably a technical reason. It feels like some sort of technical bid to it. Someone short covering, some big person buying. I don't really know, but I think there's a different reason why Bitcoin is rallying. And it's almost like when you have a technical bid to something and someone's accumulating, and then you have a headline which is positive, then that kind of causes it to reprice quickly. Not only because the headline is positive, but also because you have that technical bid. So when you have those two things married together, it can cause a very aggressive rally. And I think, to me, looking at what's going on there seems to be some sort of technical bid to Bitcoin. Because even as that probability has dropped now, Bitcoin is still basically at 66K. What the fuck is going on with my camera? that's fixed it. Not sure what's going on there. So yeah, I'm just kind of crypto feels strong to me. Compared to my slightly negative view on stocks over the next 2 months, I feel like crypto has outperformed stocks in the last month. Oh, this is mental. What is going on with the camera? I don't know why it keeps turning off. Well, I have to apologize because I've had a load of tech issues today. The other thing to talk about is Robinhood. I bet you my camera's going to turn off again, so I'll try and run through it quickly. We've seen a bit of a sell-off today and stuff. I think that's the reason you can see on the screen here. That's the reason why my book's down. PONS is down. CASHCAT is down. It's a really volatile chain. You know, when stuff is only at like tens, when the biggest coins are only at tens of millions of dollars of market cap, you will see a lot of volatility, and there's not much liquidity in these names. So if someone's up, you know, if someone is if someone's up like you know, $1 million in this stuff, and a coin has 2 million of total liquidity, it's difficult for them to sell it, and all it takes is one big guy to decide to sell some, and a few people follow in, and then you have these moves lower. Similarly, all it takes is one big guy to buy some, and people jump in, and you have all these crazy moves higher. So I think there's going to be a lot of volatility, and we're not at a point in the market where there's tons of capital flowing in, causing these parabolic moves day on day on day on day. I think we're still at a level of capital rotating quite a lot, which means you will get opportunities to buy dips. You'll get opportunities to sell at high levels. And I think I'm still bullish on the chain over the next few weeks and months. I don't think there's anything else with a narrative. With a narrative that's strong. So the goal for me really is to like buy dips, sell rips, and that. Wow, my camera is just absolutely torched. I have no idea what's going on here. So that's the plan for me on that, I think. And I would advise the launchpad stuff. I'm still most bullish on PONS. You know, I know that you had Bonk, you have there's other stuff coming. I think Noxa is coming back as well. I think a lot of this stuff is vibes driven, right? And people, I think, maybe have a bad taste in their mouth after what happened with Noxa. People don't seem that on board with the Bonk launchpad, and I think the best coin there got to like 20 million or whatever it is, and the next highest one was below $1 million market cap. So as long as PONS maintains its market share and above 50% is great, that to me just feels like the best way to play the chain overall, and that will be a direct beneficiary of TVL increasing, volumes increasing, and fees as well. And you can see, you know, when they do those buybacks every day, you can see that in the chart. The stuff will rally meaningfully. So I still like that as a play. Like, I think you have to trade it around, right? You have to, when it goes up like crazy, probably take some off. When it goes down a lot, probably add that risk back in. I think it's a good one to trade around. But I think that's probably my number one pick for the chain still. I still own CASHCAT, and I think my view is anything that runs up to whatever it is, $250 million, and comes back down again, but doesn't go to zero, like settles at something like 50, and has a community and has a real narrative behind it, it usually retests those highs. You have some consolidation, but you usually do retest those highs, and we're not talking about like the 69th meme coin on Solana here, right? We're talking about the main runner on Robinhood. So I just feel like it's a bit of a painful one. I think people are quite frustrated in it, and I didn't sell the highs, and I think I did well to sell somewhere along the way, and then bought back at a good price. But I think we're lower than my average price now. But I think it just feels like to me at some point that's going to get going, and you kind of want to hold some of it. You want to hold a bag. You don't have to be massive in it. It's tough to be massive in this stuff, but I think you want to hold some and just be patient. That's my gut on that one. I don't say that with like maximum conviction, otherwise I would have more risk, but that's my gut. All right, I'm gonna wrap it up here, and I'm gonna spend the next hour probably trying to fix this camera and figure out why it keeps cutting off. But let's call it there. We released some new features for Pro, so if you guys check out the recent tweet, we have an MCP now that you can actually plug into your AI stuff and just basically ask any questions on Pro, like how's Ovi's risk changed, are there any new trades, what was the summary of the daily markets brief. Definitely check it out, and we'll be releasing more stuff over the next few days as well. So let's call it there before I shoot myself in the head with this fucking camera. And I'll be back tomorrow, usual time tomorrow, 11 a.m. Eastern time. Cheers, guys.